Self-directed IRA for investment funds. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. In today's video, I'm going to describe exactly what you need to know if you want to use a self-directed IRA to invest in an investment fund. So let's start with the basics. What is an investment fund? So an investment fund is pretty much what it sounds like. It is an investment, generally a partnership or an LLC, that includes investment funds, so assets from a multitude of investors that are raised by the promoter or the general partner of that fund for certain investment strategies, right? So maybe it's a hedge fund that is going to focus on investment strategies like options or trading securities or bonds. Maybe it's going to be a private equity fund that focuses on investing in mature growth companies. Maybe it's going to be a venture capital fund. It's going to focus on startups with high risk but high reward. Maybe it's a real estate fund that's going to focus on real estate development projects or fix and flips or real estate loans. Maybe a credit fund. It's going to focus and invest in bonds or loans involving businesses or real estate projects. So the name is broad. It could take into account a multitude of investments. But what you need to know is generally when you use your self-directed IRA to invest in an investment fund, you are considering yourself as a limited partner, as an investor into the arrangement. So there's going to be a couple things you got to keep into account. Number one, the prohibited transaction rules. And they generally don't come into play with investment funds because as long as you or your lineal descendants are not going to own more than 50% of the fund, which is very rare when it comes to IRAs investing in investment funds, you don't have to worry about prohibited transactions, right? Unless you're Stephen Cohen of Point72 or SEC Capital that's going to use his IRA to invest in a fund he owns more than 50% of, it's not an issue. Whether it's small funds or large funds, generally the limited partner is passive investor and is not going to be part of the management team and own a percentage of the fund. So the prohibited transaction rules are generally not a problem. Number two, what's important, obviously, is understanding, are you an accredited investor? A lot of these investment funds require an investor to be an accredited investor. So if you use your IRA, obviously the IRA doesn't have to satisfy the accredited investor rule, but you do as the person whose IRA it is. So under the SEC accredited investor rules, in order to satisfy the accredited investor definition, you need to have earned income of at least $300,000 2 consecutive years if you're married, file jointly, or have $1 million in net worth, excluding your primary residence. If you're not an accredited investor, there could be some potential avenues for you to get into these investment funds, but generally very rare. Some of the larger funds actually will only allow qualified purchasers, that someone has at least $5 million in net worth, to get into funds. Why do the funds do this? They want to basically limit their reporting requirements and risks to the SEC. So what else do you have to understand? Well, a lot of these are high risk, high reward, right? They're also long-term investments. If you invest in a private equity fund, hedge fund, venture capital fund, real estate fund, you have to understand that your funds will generally be locked up 5+ years. These are not in and out funds. These are not mutual funds, ETFs, securities that you could flip, buy and sell on a marketable platform. Generally illiquid, just like private stock, right? If you invest in your friend's bar or restaurant, you can't force your friend to give you the money back when you need it. No, it's illiquid. When they sell the bar or restaurant, you will get your money back. Otherwise, you are going to be generally locked up. Same with hedge funds, private equity funds, venture capital funds. There may be ways to exit at a certain amount of years, but you're going to be locked in for several years. The upside is sheltering gains, right? Why would you want to invest in investment funds? Is in some cases, you'll be able to shelter all the income and gains from taxation. What separates IRA Financial from everyone else in the space is our expertise in this area. Why? I mean, I'm a tax lawyer. I've set up hundreds of investment funds as a tax lawyer, practicing some of the largest law firms in New York. I have a master's in taxation. There's no one in the space that can help you understand the ability to maximize your tax benefits. Whether it's a hedge fund, real estate fund, venture capital fund, there could be something called the UBIT that pops up, Unrelated Business Income Tax. Okay, my 9th book, Mastering the Self-Directed IRA, I have a number of chapters that talk about investing in investment funds, also in addressing UBIT. And UBIT is a tax that would apply in certain instances for investment funds that generate business income or use leverage like a hedge fund or real estate fund to acquire assets. Now, in some cases, if you don't understand UBIT, you may turn a very tax advantageous investment into a tax inefficient investment. But there's ways potentially to eliminate UBIT, but certainly minimize it, whether it's through offshore blockers, C Corp blockers, restructuring the investment. There are opportunities to reduce the bite of the UBIT tax. But if you don't work with the experts who can help you structure these investments at the outset, it will generally be too late. And I can't tell you how many times I've talked to investors that said, I just found out about these UBIT tax. I don't know why no one told me about it. I could have restructured the investment or did it a certain way, used a domestic blocker, a foreign blocker, maybe not even made the investment ultimately. But sometimes if you catch it too late, it's going to be too late, which is why working with the experts like IRA Financial, especially in the investment fund community, we have set up for some of the largest investment funds in the world and for some of the smallest, right? Anywhere from 5 million to 100 million to a $5 billion fund. We've helped LPs. We've also helped GPs find ways to shelter their carried interest from taxation through using the self-directed Roth. So too many strategies to talk about in today's video. The book I just published has a bunch of really advanced strategies for sheltering carried interest, profits interest, and even as an LP in an investment fund, how to maximize and make sure your investment is tax optimized. So that's it for today. Hope you enjoy the video. I can go on for hours on this. A lot of great stuff to talk about. A lot more info on our amazing YouTube channel, so don't forget to hit that subscribe button. Also, you definitely want to check out IRA Financial Group. We have great content on our website. Obviously, my new book has a lot of great details on using a self-directed IRA to make investment funds. If you want to be an LP or potentially shelter your carried interest from tax using the Roth strategy, you can always check and click the barcode to get started with our quick account option, or you can go to our app or website to get started today. That's it. Hope you guys enjoyed the video, and I hope to see everyone again on the next video. Thanks.